The broadcast is now starting. All attendees are in listen-only mode.
Silence.
Hello, everybody. Hello, Scott. Are you with us?
Yeah, I am. Just go ahead and continue. I've got some technical issues.
Okie dokie. All right. Well, hey, everybody. Welcome to the Office Hours webinar. I'll be your host, Jamie Hodge. And as always, I got my trusty wingman in here as well. Steve, what's going on, Steve?
Happy Monday. It feels like fall weather.
Yep, it does feel like fall is upon us. And as we can see by the date here, wow, September just kind of went poof, gone. Scott's having some technical difficulties here. He might be able to join us shortly.
We'll skip the survey. Yeah.
Yeah. So we'll be skipping the polls and the survey for now. Looks like we got a pretty decent crowd in here, so let's just get on with it. Of course, before we get started with the good stuff, just a quick moment to go over the disclaimer. Simply meaning that all the information that we share with you guys in this webinar or any of the other webinars that we have coming at you on a weekly basis is for educational purposes only. Translation: this is not investment advice, so please do not misconstrue it as such. If you do need investment advice, please seek out someone like a registered investment advisor, Series 7 licensed stockbroker. In other words, someone who's legally licensed to dispense, buy and sell information, or make recommendations to you. Everything we share with you guys is for educational purposes only. Hello, David. Hello, Dave. Gilbert, how's it going out there? All right, and as always at the top of the hour, just like to take a little bit of time here, talk about the community and the educational resources that we've fostered around the tech that is TI Pro. Kind of all starts up here. The trading room hosted by Barry. All right, Barry opens the doors 30 minutes before every open. A really great place to spend your trading day. Doesn't matter if you're a beginner, intermediate, advanced trader. Really good quality crowd in there. Barry does a fantastic job at moderating. You know, it could be a crowd of 300, 400, 500 people at some points in time. So Barry does a fantastic job in there, and also loves to take questions once the first hour and a half gets out of the way and his trading slows down. But he also does a really fantastic job at showcasing the way that he uses the tech. And of course, everybody's a little bit different, but Barry, he's very consistent. So if you haven't been using the trading room or accessing it, by all means, get in there and do so. It doesn't cost you a dime, and you don't even have to be a subscriber to get in there. It's free. Moving right along here, of course, on, well, it used to be every Monday. Now it's every other Monday, just as the rest of our 5 p.m. Eastern webinars. Every other Tuesday, you get Steve with the Trade of the Week, and he's going to ride shotgun with him. Every other Wednesday now, same old song and dance. We bring in our CEO and founder, Dan Merkin, along with Brad Williams, always entertaining with those two. And Andy's going to round out the Thursdays, every other Thursday, with the Trading Studio, and I ride shotgun with him. Nothing's changed on the daily support session. That will continue to be Monday through Friday, every day, from 12 p.m. to 1 p.m. Eastern. Now, on the next slide here, if you haven't been participating, this is how you get there. URL at the bottom here, trade-ideas.com/live. That takes you to our YouTube channel, and that is a static address. So once you get there, you can just bookmark it for easy access. But every day between 12 p.m. and 1 p.m. Eastern, we'll have a different trader, trainer, individual in there for a live 1-hour session. Anything TI related, any question, could be as simple as configuration or as advanced as backtesting, strategy configuration. So nothing is off the table during the daily support sessions, Monday through Friday, 12 p.m. to 1 p.m. Eastern. Lastly here, a real great 4-part educational series, especially if you're new to the product. You know, TI just keeps getting bigger and bigger. We just keep adding more and more functionality. I've been doing that for about 17 years now. So it can get a little confusing, especially when you're brand new. So this 4-part series here is accessible through our YouTube channel. If you cruise over to YouTube, find the Trade Ideas YouTube channel, type in TI University, these vids will pop right up here. 101, 201, 301, and 401. Of course, for the beginners, 101 and 201 are going to help you get over that learning curve. a lot quicker than not watching these videos. Then we get on into the more advanced stuff in 301 and 401. Good part is you can stop and start these at your leisure, but they're a great resource. So especially if you're brand new to the product, cruise on over to the YouTube channel, pull up TI University, and especially watch 101 and 201 to help get you started. Okie dokie, here we are to today's agenda. Of course, in a second here, oops, I forgot to change my gap and crap comment there. So we're just gonna scratch that. Pay no attention to that man behind the curtain. That was from last time. But it did appear to be a small cap day. I'm sure Steve will go over the bigger indices here, IWM compared to the SPY and certainly the NASDAQ today. CC readings weren't a whole lot of help today. Holly remained pretty silent as well, only kicking out 5 signals. Very little to go over with the Holly recap, but at least one trade in there had a little bit of spread between moderate and conservative. As always, some high quality orbs in there. Most of these, of course, from the long side, but did have one good short play that came through some of my favorite tickers. We're also going to do a review of the fresh strength alerts that came out today. They did pretty well. We'll take a look at those. And lastly, hopefully if we have time, I've prepared a new alert window for everybody. And I'll walk you through the idea process and how I ended up with this optimized version of the NR7s. So Steve, if you're ready to take a look at the tracking ETFs, I will kick it over to you and we can start off by doing that.
All right. All right, you should have a big giant SPY daily chart going on here, ready for you guys. Ready to start talking about, again, where we've come. On average has just been golden in terms of kicking the trend back into play. Then we had this big one gap down day last week, and we spent the remainder of last week climbing back up to just kind of touch the underbelly of that said 50-day moving average. We'll zoom in here a little bit. Close on Thursday, definitely reclaimed the 50, the blue line on Friday, but back to just kind of a little nondescript doji here. We opened up, we threw a couple of elbows up and down, and we closed back below the rising 50-day moving average. So, I don't know what's going on here, but I'm definitely not thinking it's time to just get long again. I still want to see a few things, and I've mentioned before, these rolling over of the moving averages, and our price is right smack underneath them, and I've dubbed that term, the armpit. Older traders used to call it, we're bouncing up into the pocket. Well, to me, it just seems like a big hairy armpit, and the price action gets stuck under here, as it did back here, but it always seemed to resolve itself in the past. The price action never really stuck around under the armpit very long. It always seemed to find a way to break back through, get up here to clean air, and resolve itself. But this time, it's not going as easy as the bulls would probably like it. And this is really the better of the two charts, the S&P 500, which of course has our financials, our energy, our technology, and all sorts of other stuff in there to create a broad look at what's really going on out there. So first blush, what's very noticeable to me is we've had a pause right here, a 3-day pause right at the 50-day moving average. We will see how that resolves. Again, I'm not going to say it's time to start buying stuff. When would that be? Well, it would be this remaining little 20-day moving average. If a green candle pops up and closes above that 20-day moving average, well, then maybe the buying and the risk is back on. But until that happens, I'm not extremely that bullish. I'm just kind of watching and seeing how things resolve. I'm in a couple of things. But when we move on to the NASDAQ, the Qs, remember, this was the ETF that was leading us higher all the way up. Didn't have as many dates with the 50-day moving average as the S&P did. But this one also is definitively being stubborn. All last week, it really couldn't get back above. Well, Thursday and Friday, it got above the 50, but was kind of hampered by that 10 period rolling over, and that 20 is going to start to roll over too. So for all intents and purposes, the NASDAQ, the Qs, are also fighting the armpit. And until they can show a little bit of better closes that aren't dojis with the wicks and to the tops and the bottom, and technically this is a close below the 50, just like we had a technical close below the 50 in the SP in the SPY. So both of those are still going to have some work to do to prove to me that it might be time to start buying stocks after this incredible move that we've had. At some point, normal markets like to take a breather, and people do take profits and let things reset and press change, rearrange, but I think we're long overdue for that. Is it going to happen immediately? I don't know, but there's things going on out there that might have a say in it. And we'll finish with where the strength was today. As Jamie mentioned, the small caps. If you're playing small caps, and I even saw a tweet on this the other day that said seasonally, when September, October rolls around and the big guys start to get sold and start to get a little sloppy, for some reason, we're starting to enter that holiday seasonal period of small caps. And well, they held up today. Technically speaking, they are in clean air. There is really nothing armpity about this price action, but the problem with the IWM is it's done nothing. It's just made a lot of noise and spun its wheels and done a lot of that. So the proper way to probably play the IWM is to essentially just look at the range bound side of things. And to crudely kind of do that, that's the way you want to look at the IWM. Maybe there's some more meat on the bones, but if this gets taken out back here, the over-the-counter sellers, the OTC, the small caps, Russell 2000, whatever you want to call them, they might start to see some pressure again, because we're basically just in kind of the mid-range here. So that's the only thing of interest really on the bigger picture. It's just that the small caps had a much better day than the other ones. Trade of the week wise, we're not going to have our webinar tomorrow. We'll have it next Tuesday, but Ride is still riding into the sunset, doing okay. And in the interest of that one working well last week, we picked a REIT that kind of had that same look. Boom, look at the size of that base. Here we go. Now we can bring it into perspective. Bit more of a topping wick than we'd like to see today, but that might be just what you would expect after 1, 2, 3, 4, 5, 6 green candles. The orange line on this week's trade of the week is all the way down here. It's not keying off a moving average. The moving averages are all kind of converting here. So ideally, we kind of pick those up maybe the next day or two, call that consolidation, and we can move up higher out of that range. Before I give it back to Jamie, I was kind of indecisive on which one to do this week because Robinhood is starting to look really interesting. Some of you have heard me talk about, sometimes these charts take on what I call the bird in the hand setup. Yeah, the bird flew above its moving averages. It's in clean air, and now it's just kind of resting in the palm. And usually anything good coming can get those things motoring a little bit higher. So if you don't have a price alert on Robinhood, it might behoove you maybe to drop a price alert in there, maybe above Friday's high. And tomorrow, the next day, if we break through that, don't lose sight of Robinhood. I think that one might be another one to keep an eye on. So still in the armpit, still battling the moving averages in the big picture, Jamie, but we'll see what the next couple of days bring.
Yeah, I like the look of that hood. I will be keeping a close eye on that one myself. All right, Steve, good stuff as always. Thank you. Let me grab it back here. Okay, hopefully you have eyes back on my desktop here. Real quick here before I move on, there was a question that popped up. What is a CC? What does CC stand for? Well, that stands for compare count window. Real quick here before we get into the rest of the presentation. CC window right here, this is the one that I consult after the first 15 minutes of every open. Now these counts aren't accurate. I had to reset my software a couple times during the trading day. But just to give you a peek of what's in here, we have a green data side and a red data side. And this is pretty much just looking at opposites. In other words, same filter set, market cap above 4 billion, a little bit of 1 minute volume spice, but a new high. And then on the red data side, we've got the exact same filter set with new low. So basically this gives me a ratio of stocks hitting highs and lows in that first 15 minutes. And typically what I look for is a count above 55% one way or the other before I really pay any credence to it. And this is what we had today. after the first 15 minutes. We did have a bullish count, but only to the tune of 53%, which typically in my book means, well, even though it's bullish, anything can happen. And certainly when we look at today's market activity here on the, oops, my pointer back there, on the intraday, yeah, we gapped down and just kind of inchwormed and whipsawed all day. Not the most conducive type of trading range today on the SPY, as well as my blotter reflected all day. I was like, yes, oh, yes, oh, and that was just kind of the way it went. Ended up making a tiny bit, but certainly not as much as I would have liked to. Anyway, moving right along here. So once again, 53% bullish, kind of weak, didn't really help a lot. And the market, well, you just saw the action that transpired after that reading. Holly was pretty quiet today, only 5 signals. And typically in the Holly recap, I'd like to cover 3 different topics that might materialize throughout the day. Conservative versus moderate spread, was there any? And how might we have grabbed some of it? I tell you what, I sure can't spell today. Keep misspelling things and putting extra letters on things. Well, and just messed up my my slide there. Only one S in KROS. Trade arounds and add-ons, they just did not exist today. There was a little bit of spread in that KROS trade, so let's just take a look at that real quick here. Holly recap going to be short and sweet. So, conservative profit, moderate profit. We can see the 2 columns here, and we can see that the only one that had a spread at the end of the day was the KROS, conservative profit. And by the way, all the numbers that you see here on my Holly blotter are based around using $100 risk per trade, okay? Then the system sizes us accordingly, according to the stop loss for that particular signal. So only one here where the spread was larger, conservative 1386 on $100 risk, moderate profit 5286. So while it isn't the hugest of spreads, it's still worth taking a look at here. Here we can see where Holly, or the AI, called the buy signal here right at 40 and 39 cents. And we got a nice little upward movement. Not too shabby. Of course, why did the AI get out of the trade? We can always reference the exit reason column. This is always going to be, why did it get out in conservative mode? Profit save, okay? Typically, when the AI makes an entry and we don't have a lot of movement to the direction that the trade is intended, in this case, it was along, get these little stair-stepping candles here, or what the system might perceive as consolidation. In other words, it's not going that way fast enough. That's when we'll typically see Holly put the brakes on early, as she did in the profit save here. The shaded area is coinciding with the time spent in the trade. We can see the exit price here, 41.31. All we basically had to do is make the decision to stay in the trade, right? Maybe we peel off half, set the other half at a break-even stop, which would have kept you in this one the remainder of the day, or you keep the whole lot, all right? So just ignoring the AI signal based on what you see going on with the chart is kind of the simple way to view this. Should I take more risk and ignore the conservative exit? In this case, it would have paid off. A lot of the times it pays off a lot more handsomely, but just kind of keeping with the theme of the day, not a lot of rippers out there, at least from the AI anyway. So if we would have held it by the close, we would have made roughly 4 times what we would have made in conservative risk mode. As you can see, we didn't really have any stop outs, and that's typically what I like to showcase if the stop out was a good candidate for a trade around. And there really weren't any good times to add to these positions. If we take a peek real quick at Dollar Tree, which wasn't a bad mover, you know, just kind of off to the races. You know, I could stretch it a little bit here if you're really reaching for an add-on. It's just not the highest quality. We didn't really have a lot of movement. I really liked the signal when it came out, though, in real time, because it kind of coincides with one of my favorite intraday patterns. You know, we had a run up, little consolidation area. This opening range is broken. Of course, what's the strategy that produced it? Breakout, right? Perfect little breakout right there. Another opportunity, as this pattern repeats itself, showed up right here. as that range is broken. Well, I can't draw it today. This candle right here, this little doji type, that's when that range was broken for a second time. So this would have been an okay time to add to the position. You just didn't have a whole lot of potential there. Adding some on at what, 86.70, topping out at 87, and maybe another 50 cents in there. Okay, a lot of the times you can get a lot more, but just due to the nature of the day, while it was a good add-on, it just didn't tack on that much to the overall trade. So just kind of a lazy day for Holly. You can see from the conservative, moderate profit, moderate and aggressive, just pretty much flat, conservative up, not quite 1%. But then again, this is typically Mondays and Fridays, from my experience, are the slower days. And Tuesday, Wednesday, Thursday is when more of the interesting stuff happens. So we shall see moving forward. Okay, and then moving right along, as there are on all days, there are plenty of opening range breaks that do perform quite well. The key is catching them at the right time. Okay, we do have alerts for this. And before I go into the way I find them manually, let's just take a look at our pre-configured offerings, just in case anybody might be wondering. Maybe there's some people out there that aren't even familiar with the pattern. So let me just kind of go over that real quick here before we jump into these plays that were produced today. Here are all of our opening range breakouts. Of course, we've got the smaller time frames, but I'm more of a 30-minute, 60-minute opening range break because you got to give these patterns time to develop. 1 minute, 5 minute, not really my style, more like 30 and 60. Problem is, these things can occur after 60 minutes, okay? And once that threshold is passed, kind of on your own, okay? Because they can happen at any minute of the day, depending on how long the consolidation has been going on. So let's take a peek. And by the way, all the signals that I'm about to show you guys, or all the setups, came from these two windows right here. And I'll make sure that I drop these cloud links into the chat panel before we conclude, along with all the other applicable links that we're going to showcase today. But these guys are relatively simple, no pun intended. Notice the title, relative volume. So keep in mind that an opening range cannot be broken to the upside unless it's hitting a new high. So I've got a real simple filter complement in both of these, just saying relative volume has to be a minimum of 3. 100,000 shares had to have already traded today, trying to keep away from the thin stuff, and then just a cap of 150. It's for both of these guys. So let's take a look at the long side first. No big surprise to see this one come through today. When the market is a little weak, a lot of the times these bigger stocks, these big conglomerates like Dow and some of these other, Unilever, what people like to refer as defensive plays, tend to show up. And so Dow is no exception here. I'm just going to convert this back to a 5-minute chart because now we can see what I'm getting at here. Okay. Clearly buyers in control in the first 5, 10, 15, 20 minutes, right? As we got this nice little run up here, and then we got this nice little consolidation for about 20, 25 minutes here before we get to this candle here. And we can see from that prior high, 20 minutes into the open, that high is breached, and we got a nice little tight consolidation following the breach. And this is typically what I look for. Now, this one happened relatively quickly, I guess, in the grand scheme of things, but sometimes these things can consolidate in this fashion for a lot longer, 1 hour, 2 hours, 3 hours, sometimes all day. However, once we get the alert and we pull it up right here, and it's right in that candle, that is the perfect opportunity to play that opening range break. Now, the orange line that I have marked off down here, this is our risk area. So how did I discern the risk area? Well, not including the entry candle, which is right here. I look back 15 minutes, 5, 10, 15, take the lowest point of the prior 15 minutes, not including the entry candle, and that's how I assess my risk. Now, this one worked perfectly. Never even really threw a little bit of an elbow in that second candle, but not even halfway down to the stop loss area before it firmed up, and then it was just off to the races. So all this area here between the signal and the pretty much the high of the day is the reward area. Got a real tiny risk area, got a nice fat juicy reward area, and that's what we like to see. So a really good one and a bigger cap stock there. And
Can
now,
you hear Jim's question on inside market?
sure. Can you explain the inside market setting? No problem there. That's one of the oldest filters that we have there. And I'll just pop back into configure here. Distance from inside market. Okay, so the inside market being the level 1 bid and offer. Okay, so let's just pretend for a moment that stock XYZ, the bid was 10 and the offer was, say, 10.03. Okay, so if you bought it at market, you paid 10.03. If you sold it at market, you only got paid 10. So there's a 3-cent spread in there. Well, every time an alert comes through an alert window, it's being driven by a print from the time in sales. All right. So with a very tight setting of 0.2%, basically I'm instructing the system to act in the following. If the print that's going to generate the alert is even outside of the offer or below the bid, in this case it would have to be outside the offer. So if the bid was 10, the offer was 10.03, and in the print was at 10.04 outside of the spread, it would be ignored, because about 90% of the time when that happens, it's a bad print or a bad tick, what we might refer to as a late tick. And that will keep the data stream clean. So I'm not, chasing my tail looking at bad prints. Okay. So, typically you're going to see people using distance from inside market with a max setting. You really don't want to see, using minimum distance from inside market would only show you things printing outside of the spread to the up or the downside. So that's why you're not going to see me using any min settings here. I'm just trying to keep it clean and make sure that I don't have to pull up something that is a bad tick and waste my time. It's really important when you're back testing. I mean, we can quickly discern if it was a bad tick with our charts typically. But when you're back testing, that's when this becomes really important, so you don't fold those bad ticks into your back test results. So hopefully that makes sense there, Jim. And I also see your other question here. Jim, it's funny. It's like you must be a bit psychic, because we're going to get to that towards the end of the presentation. So, having said that, let's move on with the rest of these. Of course, most of these are going to be longs today. I do have one short example. Here's another decent one. MCF, looking very similar to what we saw in the Dow. This one had a little bit of a gap up. Buyer takes control, then they take a break, right? Then we get this perfect little boom right here, breaking that opening range right about the 445 level, and this boom, 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 up and away. Depending on how you felt with that movement. Another time maybe to add to the position, but it would have had to set a little bit of a wiggle. But this initial entry signal right here was pretty choice. All right, that guy coming in right there at the 445 mark, and we topped out about 478. So once again, small dollar stock, not a bad percentage move, and the trade worked rather nicely. You can see my B right there. I was actually in this one through some automation today. That's my little B buy signal from Brokerage Plus. So a decent one on MCF. And once again, what was our risk level? Okay, not including the entry signal or the entry bar, 5, 10, 15, which kind of matches up with the low of the entry candle. Sometimes that happens. Push our other line up here. Risk level right here, reward level, multiples larger than the risk level. So a nice little clean pattern in MCF, reminiscent of the Dow as well. Oh, by the way, MCF, let's take a look at that market cap. And as you can see here, market cap, not even $1 billion. Now we know Dow's a big market cap. KRA, How's that market cap? Not too bad, 1.46 billion. This one, similar but different. Nice little consolidation in the opening 30 minutes, and then boom, it cracks right there, 44.77, roughly speaking. I mean, that risk was tiny, so tiny. But you really didn't have to worry about it because after that bar, it just kept pushing through higher and higher. As I said earlier, sometimes these patterns repeat themselves, so you would have had an add-on opportunity right about an hour and a half into the open. But not a bad signal from the initial range break there, 44.76. Let's push our reward line on up. So once again, this is what we're looking for when we're trying to play these. A nice tight consolidation before the break, not chasing it. I mean, even 5 minutes is a chase, okay? So therein lies the key here, getting these as close to the original break as possible. And if you miss them, just having the discipline to go, well, that's what I'm looking for. Timing wasn't there. I'll just wait for the next one to show itself. So once again, KRA, a little bit bigger of a market cap, tiny risk area, nice and juicy reward area. Okay, one more to go here on the long side. And looking very similar to the flavor of the day. A little bit bigger of a market cap here, 3 billion on the TCBI, but pretty much the same song and dance. A little bit of a gap up, buyers in control, then they become nice and equal for a period of time. And we get that range break. This one came a little bit late. The volume wasn't there right here in this candle right here, which is technically, but this one came so soon and was still relatively within, the golden zone. So this one worked out just fine. But that's when the volume came in. Of course, we can see the volume bar as well, just a little off there. And as you can see, just a nice grind up for the remainder of the day. And if we mark off our risk level on this one, let's just do that real quick here. We're about right here. And of course, our reward level way up here. So once again, very nice risk to reward. And that's what we're looking for. Okay. So just keep in mind, this is the pattern that we're looking for. Sometimes they run up and then consolidate. Sometimes they just consolidate. Sometimes they come down and consolidate. But it's the timing that we're looking for. If you miss this one, if you're on the phone or eating a sandwich lunchtime, all of a sudden you see TCB hitting a high up here, sorry, that's too late. That'd be way chasey, all right? You got to try to get them as soon as that break is occurring. And that is why we use new high and new low on the downside. Let's see, Jim, how do you specify after market time? I'm not really.
For top lists, you want live always. And for alert windows, you're going to want post-market high, post-market low.
Right. Just in general for looking at our post-market alerts, that would be correct. All right. So only one I was able to participate into today on the downside. And that was this little guy right here. Let me get rid of my lines there. Okay. OLK. Market cap, not too bad, 2.8 billion. So more than likely shortable at most BDs. And this is our opening candle right about here. You see it got a little wicky. But then this nice consolidation area right here. And then boom, not quite an hour into it, about 55 minutes, we come down here and we break the low of this second 5-minute candle here. And that was a nice entry, okay? No big gap here, no big run down and then pause, all right? The ones we were looking at earlier gapped up, ran up and paused. This one did not gap down. It did not run down and pause. It just kind of formed this nice little consolidation in the first 55 minutes, and then it broke right through it here. So our risk on this one, a little bit bigger, but this is not uncommon for shorts these days. They're just not setting up near as tight and nice as a lot of longs. So this is our risk area up here. but we still have a nice large reward area, marking it off at the bottom. And I'm not saying that, you know, everybody's going to pick the bottom, and we're not always going to sell the tops on the prior ones that we were looking at, but that was the potential reward, which is much bigger than the risk area. Now this one, of course, bounced considerably, but even if you would have stayed in this one all day, you still would have made a little bit, but you really would have maximized your gains down in this level right here. Plenty of time after it bounced off the bottom to get out. So just not enough quality coming through here on these guys today to have more examples to look at. But I will make sure that I drop these 2 cloud links into the chat area before we're done here. So that's all we got for the opening range breaks. A lot more quality to the upside. No big shocker there. Okay. Let me do a time check here, because you might have to. What we're going to do is we're just going to skip around here. If we have time, we'll do the strength alerts. But to what Jim was saying earlier, and I think he was talking about optimizing or tightening up some of these consolidation plays, okay? Because the ones we were just looking at have to be hitting highs and lows, but stocks do this all the time, and they consolidate, but they're not near highs and lows. And by the time they break out of the consolidation, they might have significant distance to go before they hit highs or hit lows, in which case you're not going to be getting a timely alert. So let me tell you how my brain worked today. And it was because I was wondering, I came across Angie later in the day, and as you can see here, it was a beautiful little opening range break right about here, okay? Notice this one did act kind of like the long, except we had a gap down, seller took control, then we had this nice little consolidation period up until about, what was that time? About an hour and a half into the open. I looked at that, I'm like, did that come through my turbo breaks down? Lo and behold, it did not. So I was thinking to myself, well, volume is nice, but it's not the holy grail. Maybe I could design a window to find this Angie trade. So where I went first was to something that maybe some of you guys have seen before, and that is this window here, or it's not really a window, it is a URL. And if you just go to Google and type in stocks like this, it'll come right up. But what it does is it allows us to examine time frames and see what alerts and filters, well, number one, what alerts fired for a stock during the period that we analyzed, and what filter settings were during this time period. So what I did here, if you can see over here, I started at 11:30 Eastern time, which is actually 10:30 on my charts. Okay, so that would be this candle right here. Yeah, that's 10:30. So it'd be this candle right here. You can barely see it. Okay, it's a little bitty candle in there. So anyway, I started here. That'd be 11:30 Eastern, and I analyzed a period of 60 minutes. So from 10:30 all the way back to 9:30. Okay, because that is the longest period that we can examine. And I wasn't really interested in all of the alerts. I was interested more in the change filters. So these highlighted ones, okay? How much had the stock, you know, been down in the past 2 hours, the past 60 minutes, 30 and 15, okay? Don't really want to get any smaller than that. So what I did is I took all these settings and I posted them into this window that I'm about to show you guys. All right. And when I did that, and of course, there's been some additional optimization, and I'll get to that shortly. But you can see I've got a nice hefty filter complement in here now, okay? But this is what I gleaned right here, the change in all of these time periods from stocks like this. These are not optimizations. I took these directly from stocks like this. And then what I did is I checked to see if the window produced Angie. Lo and behold, it did. But guess what? There was a gazillion trades in there. Yeah, Angie was flagged at the proper time, but it was too much, right? So then I started optimizing a little bit, and then I narrowed down the number of alerts. And then I thought to myself, well, okay, it did find Angie, but how's it going to do overall? So you might know what I did next. I right-clicked and I went to the back test. And guess what? Even though it found Angie at the right time, I would have liked to have shorted it. The back test looked horrendous. It was just all red, right? So what did I do next? I'm like, well, if it looks this terrible going short, which is no big surprise since we're still, not technically in a bear market, are we? How would it look to the upside? And it looked relatively decent. And then I was like, okay, now if I optimize this, I might have something that might be actually useful. So see, sometimes the idea that we have turns out to be a little bit different, but this is how the process went. Could I find a good short alert? Sure, it found Angie, but look at the groupings that it found as well. Too many trades, run the initial back test. Looks terrible to the short side. Guess what? Looks good to the upside. Now let's get to work optimizing it to the upside and see what happens. Okay, so what I ended up with here is a long alert that's going to find these stocks. They're doing these narrow range patterns. That is what NR stands for, narrow range, 15-minute. Okay, gives us several 15-minute bars to take a gander at. We'll leave it on 5s for now and just see how they look. But after it was all said and done, this is what I came up with. And I will share this with you guys as well before we're done. Just a quick word here about this window. Does that mean I'm going to jump in and take every trade tomorrow? By no means. Does that mean I'm going to pay attention to everything that comes through here tomorrow? Yep. And if I like what's going on, then yeah, I probably will hit it. But as with anything, especially new, you want to watch it for a few weeks sometimes before you commit it to production if you're doing automation, or you're just going to treat it like any other high quality window that you like to watch and get the alert from it. Then if you like what's going on the time frames and the charts that you prefer, well, then that's when you would hit the trade. So not taking trades on this till 9:45 Central Standard Time, 10:45 Eastern. Via a little optimization, this is where it, the productive period ended. This one is geared up for a nice intraday hold time, 45 minutes. Risk management, just a 2% stop loss. We're not capping the upside. We're going to back test past 40 days, and that's it. And I see your question there. No, David, I'm not swinging. I'm not swinging a whole lot of anything here lately. Okay, and here we go. Now, notice the trade count. We still got 329 trades coming through over a 40-day period, so that's nice and manageable over that number of days. And we're winning a pretty good percentage of the time, 63.5%. I thought I had my equity levels dialed in here pretty good. Yeah, that's still, let's see. Yeah, I don't know how that got out of whack there. We just want to be right on the threshold of a 4-to-1 on our buying power, then that would get us there. And you can see here, these numbers are based around just throwing $3,000 into each trade. Of course, I'm calculating for the zero COM environment. Not bad on the equity curve. I really like what I see down here. When it goes on a streak, 7 winning days in a row. When it does lose, it looks like only 2 consecutive losing days. And usually down here, I like to see a 2-for-1. This one, a little bit better than a 2-for-1. Biggest losing day, throwing 3,000 per trade in, $61. Biggest winning day, 634. So I like what's going on there. When we take a look at the daily distribution, it doesn't trade every day, but not too bad here. Okay, not too bad at all. Drawdown, intraday drawdown, not even 1%. That's also very encouraging. So started off with an idea turned out being something completely different, but that's oftentimes the way things are discovered. You know, hey, the pharmaceutical industry is another industry that I can think of where certain drugs are invented by accident. They think they're going to solve one problem and they end up solving another. I think all of you guys know one drug that might pop to mind on that topic. But this is just going to be a nice solid little window for you guys to keep an eye on here. Let's just go back to the last day. And
what do they sell more of? What do they sell more of? Opiates or stool softeners?
You know, Steve, that's a good question.
It's just a circuit.
I think one feeds the
exactly.
other, doesn't it? Yeah. But the reason I wanted to pull up just the last day here, not because it's a green day, just because it's the most current day, and we can see the symbols that are being generated here. Okay, and we can check them for liquidity and are they tradable? Fate, clearly tradable. Chewy, everybody's heard of that name, nice and tradable. Let's just back up to 15 minutes here so we can actually see some of the signals. You know, keep in mind only a 45-minute hold time. We'll back up to that fate. Not bad, not bad, considering, okay, you know, a $4.60 loser, small winner here. But once again, this is based around $3,000 a trade. But the bottom line is all these are nice and liquid names, right? You're not going to have to worry about, this thing gapped, it's not liquid. All of these names should be nice and liquid. And you're going to have kind of some sanity on these patterns here. You're going to see these nice little consolidations intraday. Now, they're not all going to be pretty, but nothing ever is, right? But you're going to see the quality ones, right? LZ, you know, not so quality. The more 15-minute candles you have making up the pattern is going to be the higher quality ones, thus indicating a longer period of consolidation, like you see in the LZ here today, or Friday. All right, little time check here. Okay, we got just enough time, and don't worry, I'll drop this in the chat window. But we got just enough time here to get through the review of the fresh strength alerts. So, real quick here is the strength alert window that's automatically updated every Monday with the strength alert plays. Now, this column usually isn't native. And by the way, if you don't have the strength alert window and you want to grab it easily and insert it into your layout, of course, all my windows here are free floating. So if I want to come over here and get it without changing my layout, here's how you go about that process. New dock channel bar, okay? Then you just click on the strength alerts. It would open up in this container and not disturb your existing layout. Once that loads, here's the window. Now, we would do this first before we saved it to our cloud. First, we're going to right click and just say duplicate it into a free floating window, at which point you could park it on your default layout and save it, or you can just go, you know what, I'm going to add it later and save it to the cloud. But no matter what you do, boom, there you have that TI strength window. You don't necessarily have to migrate to the channel every time. But like I said, this is going to update every Monday automatically for you, so you don't have to do anything. But boy, these got off to a bang of a start. So this should start to become part of your Monday protocol. You know, you're going to have Steve's trade of the week coming in there, and you're going to have 5 strength plays. So a total of 6 things coming at you fresh every Monday morning. Trade of the week comes via email. And of course, these do as well, where you can just grab this window and boom, they're going to be there every day. But look at these change from the open. You know, this is not relative, or this is not native. I just added it. But out of 5 plays today, the only one that was down 1.2% was box. And let me get this activity. Come on. All right. So yeah, box a little weak, but boy, the rest of these were on fire. C-Day up 1.6%. ATKR up 2.8% and higher, you know, during the session. all these are slightly higher. FPP closing out at 2.9, and then ERF just tearing it up after a significant gap, moving up another 6.3% in the regular session. So once again, that's an easy way to get your TI strength alerts. Just archive that window from the strength alerts channel. Watch that. Watch Steve's TOW. That gives you 6 fresh plays every Monday. And this is just, in my opinion, the easiest way to manage those. All right, now we're running out of time here, so let me go ahead and get those links dropped in the chat panel for you guys. Copy that. All right, so that should be all the links in there. Let me just make sure. Turbo up, turbo down, the NR7 intraday, and the strength alerts. And real quick here before we conclude, let's see. Well, can't find where that went, so I'll just load it back up here. I played around with the NR7s on a one-day hold because you never know until you run the back test. And we'll just do this real quick here. And I haven't tried any longer hold times, but as I pointed out earlier, 45 minutes. But right before the webinar started, I just thought to myself, well, what if we held these overnight and got out at the following open? Would the wheels fall off, or would it still look decent? Okay, well, things changed up a little bit, but check out these winning totals, all right? You have a lot bigger days. Now, I haven't tested any longer hold times. This was just a simple, hey, okay, I designed it for a 45-minute intraday hold, but what if I held overnight and got out at the open tomorrow? And while it doesn't look quite as juicy on the success rate, this is definitely interesting. You're going to have a lot of smaller losing days, but on the days where it does win, you had some monster days in there. So just keep that in mind. This is still designed for a 45-minute hold time, but since you have it now, you may want to get in there and explore different hold times on the swing trade horizon. And it might not even be a bad idea to go in, strip out some of those filters that were optimized. And I'll just say one more time, the ones that were not optimized were the change filters. Change from the open and all the smaller change times. I think the only optimization I really put in here was the S&P change. So feel free to strip some of those filters out and put it through the paces on a swing trade hold time, and you might get something that's actually usable. But for now, we're just going to say that this is the intraday version. All right, Steve, anything I need to backtrack on as far as questions?
I don't think so.
All right. Well, in that case, it's time to bring Scott in, assuming he has remedied his technical aspects. Are you out there, Scott? He might still be having issues. So if that is the case.
Yeah, he said go ahead and close it out for him.
Okay. If that is the case, I'll just do my best Scott imitation here. All right. So we do have an ebook written by Dave Mabe, one of our super brainiac genius coders here, director of our software development. My favorite strategy indicators. You can download it for free at the address that you see there, trade-ideas.com/strategy. It is free and it is very enlightening. So do yourself a favor and grab it. The code, discount code, which will save you 15% off your first month or your annual subscription, is Holly Rocks. So if you're a new sign up, be sure and insert that code and save a little bit of money. You can find me on Twitter. I am QuantBot. Steve is TISteveG. Visit us on Facebook. If you do have any billing questions, this is the phone number that we allocate for billing. If you need live help, you can always hit our live chat on the website. Or if you prefer the email route, info@trade-ideas.com will get you some attention as well. So want to thank everybody for popping in today. Hope everybody has a green rest of the week, and we'll see you guys on the flip side. Bye-bye for now.
Yep. See you next time.